All right, guys, welcome. Good morning. We're going to get into it. We're going to look at these charts, put out a video here to figure out where things are going as we wrap up the week. So, um, first couple hours are over. A lot of the time, those first few hours are where you're going to see some of the movement or the technical breakdowns or recoveries, just the technical, the important technical information. A lot of the time happens in the morning. So, we're through that first couple hours, so now we'll get into it. Look at what we got in the charts. So we're going to start out with the triple Qs. Before I get started, though, hit that thumbs up. I'm trying to get over 200 thumbs up, and I do appreciate that. So triple Qs, we've got bullish. The momentum's starting to turn bullish on this hourly chart. Ever so slightly bullish divergence. You can see here on triple Q's price is has worked its way lower here, and yet we've got some bullish, some short-term bullish momentum. So that tells me that, we're going to get a little bit of a bounce here in triple Qs. It is only an hourly chart, so it doesn't set us up for a huge bounce, but we could bounce anywhere. We could bounce back to the top of this range, up around 285.71. That might be all that we're going to bounce, or maybe even all the way up here to 289.40. So we're going to watch that. That's really all I see on the hourly chart there. Daily, we don't have any, there's no negative divergence. Momentum is actually still up on the daily. You can see here, we're still kind of moving higher, and we still are making higher highs. So positive momentum on the daily, and we now have bullish divergence on the hourly. To me, that sets us up for some sort of a bounce. So I'm going to watch for. Okay, so that's the Qs, and this is just short-term stuff. We're just focusing on what I see today. SPY. So here's the daily chart on the SPY. It's not negative divergence on the SPY. It is just simply downward momentum. You can see here we made a high back here on the daily, a lower high right here on the RSI, but we also made a lower high in price. So price is not diverging on the daily. It's just simply going lower. Let's look at the hourly. Same deal on the hourly. We have on the hourly, sorry, I got to kind of clean these up. On the hourly, we've got bullish divergence where you can see momentum is starting to make its way higher, while price made a slightly lower low right here while momentum was making a higher high. So momentum is telling you that price is going to move up, and price has moved up since that divergent low. It's moved up a little bit. We could move, we've got a couple gaps, but this area right here looks like it's where it's going to go right there. So maybe a little bit higher up to 347.30 or in that area. Might be all that there is for this hourly divergence. And IWM here. IWM is, it's holding the support here. Here's your support at 159.60. It came right back down to that and bounced off of it like a champ. You can see there's your bounce. Now, if we make any new highs and go up just a little bit more and really peak above this level of about 162.60 anytime soon, and that's going to be a divergent high. You can see here on the hourly chart, it will just extend this out, and then that would be a divergent high. So that is potential, that's the potential area where it could break down. If you look here on the daily, there really is no divergence. It's a slight divergence here on the daily. Right here, we made the peak back here on the 11th, August 11th. We made a higher high in this area, while momentum kind of made an equal high right there. So it is diverging. Price is moving up, momentum's moving, kind of making an equal high. If we make that slight higher high, let's say we do it today or tomorrow, today or Monday or next week sometime, then we're going to have negative divergence on the daily chart as well. You'll see here, and a much more firmer negative divergence, because right here If we just make a slightly higher high, you're going to create that negative divergence. It's going to look something like this with the higher price and a lower momentum. So that would be negative divergence on the daily. Then we'd have it on the hourly. So then what I would be looking for is, I'm really looking for a break of this level. This is the price level, 160, about 159.60 or somewhere right in there. That's the trigger that I would be looking for to set up a short trade. But if you've got the negative divergence intact, then it tells you that that's going to happen. So then you just wait. And if you get the breakdown of that level, then most likely we'll head down to 149.60, and that would be a trade of about 8.5% or so, depending on when you actually took the position. So that's a trade idea. We're starting to get what looks like is going to be a setup. The setup's not quite there, but we're anticipating it. So we'll just wait and see if this starts to give us signs and firm up for the next trade. Gold, really has put in that bull trap right here, and you can see here on the hourly. Here's your downtrend in gold. We just were walking down, nice clean downtrend. Here I can get rid of this uptrend right here on that one. Nice clean downtrend right there. We broke to the upside the other day. Let me zoom in. Here's your breakout, and it was a failed breakout or a bull trap. It also is a head and shoulders. You can see the shoulder, the head. And then it broke, and that's a bull trap. So then we came up, did another back test of that trend line, and rejected again. So to me, all the signs are in that gold's heading lower. And I continue to look for 1790, 1800, somewhere right in there. Redfin here continues to chop around below this daily support. Here's your daily chart, and you can see here's your support line. We've just been walking up that, and then we came down, plunged, we caught that short there, and then that broke support right here, and we've just been consolidating just below support. So that's what I said I thought was going to happen. I thought we were going to just kind of chop around below here and then possibly recover it. The reason why I think that there's a possible recovery and this would create a bear trap is the hourly chart. We're starting to get bullish divergence. You can see here starting to build some bullish momentum here on the RSI and the PPO, while price continues to kind of chop around, spiking down, making new lower lows, and it's diverging from the momentum. Momentum's starting to recover and move up. So what I would be looking for is a break back above this downtrend line. Right here, if it can break back above, then that's probably that would be your bear trap, is what it would look like, and that would probably set this up for a move back up to about 49.90 or something like that. So that is, I'm on watch for that. DraftKings, I actually took a long yesterday on DraftKings. Let me explain why I like this one. So, DraftKings, we've kind of come, well, here's the daily. We've kind of come full circle. So you had negative divergence right back here on the daily chart. This high right here was a negative divergent high, telling me that we were going to break down. And so that was basically what I was looking for. And when you get to the hourly here, there's your breakdown right here on the price support. We did a couple back tests, tagged it a couple of times there, and then we started to break. So completely caught that short. I caught most of that short, but then I started telling everyone I was going to start covering, and I did. I covered down here at this 43.95. That was really the area I was looking at. We hit that, and so now and you can see that was support right back here, or that was resistance way back here in June, that 43.95 area. We came down, undercut it just a little bit, and then we basically we're starting to put in some bullish divergence. And you can see here on the hourly chart starting to build positive momentum or bullish momentum. Price is still moving lower, creating that divergent high. So then you have this downtrend. It's not the cleanest downtrend, but I've got a reaction high, another reaction candle there, a couple right in here, and we just broke yesterday. So this was your breakout above. So I got long on this breakout. I was waiting to see if it was going to be impulsive or if it was just going to kind of, creep above it. but it looked good enough. I took the long, and now, we've come in for some back testing. So now that we've broken above this support, we have bullish divergence. Any new lows, if it just wants to kind of creep a little bit lower down to this $40 or something like that, that's going to be divergent lows. Those are areas to add to a potential long position. Where am I looking at this thing going? Well, I don't expect it to go too high because this is just hourly divergence. We don't have it on the daily. So I'm thinking, we're probably going to at least get up to this kind of 43.97 area, and then possibly, I've got a range up here, but I see it as 47.68. You had a reaction back here. This candle kind of wicked through it. And then the body of there's more reactions a little bit higher up around this 49.40 area. So I'm going to, if this gets up to this area, I'll start taking profit on my longs up in this area. From where we're at, or really from the breakout up to there, about 12 to 18% could be a nice trade. So that's the trade that I'm in right now. It's still, relatively close to an objective area to be long, but again, you just have to continue to watch it. Right now, the setup's there, the trigger or the entry is there, and now it's just all about managing the risk. So again, that's just a trade idea. It's just my opinion, not trading advice, obviously. Tesla. So we got a little bit of a breakdown today. Let's go to the daily here. You can see here on the daily, we're still in this range. This is not, I guess it's not a full breakdown. The low of the range I see at about 408. We need 408 to break in order to set this thing up to really start to move lower. If 408 breaks, I really think that 330, it's about 337, or 336.22, somewhere right in there. I think that will be in the cards if we get that breakdown of that 408 level. We do have, on the daily, slight negative divergence. It's not the best negative divergence on the daily, but it is there. And that's probably why this has not really played out for a big move down. It's just kind of gone sideways. But we have broken the uptrend right here. So, what I would see is there's a couple things that could happen. One, we could start to bounce, and if we bounce and run up and tag the top of this broken trend line up around 505 or so. Sorry, I got to move this to see where it's actually falling at. Up around 518, 520, 525, depending on when it actually would get there. If we do that and we do it soon, then that would set up a nice clean negative divergence on the daily. Right now we have it, it's just not the cleanest. So that is a possibility of something that might happen. Or we just break right here. We just break this 400 level and break down. That's possible as well. So that's really all I see there on Tesla. Moving on. All right, PayPal has one of the better setups here, so I'll just go cover this in a little bit more detail. We're going to start out on the weekly chart on this one. I just want to point out what I'm seeing across these time frames, because this one looks like could be a good trade. So PayPal, you've got weekly divergence right there. You can see momentum on every week by week has been fading, getting less and less, while price has continued to make kind of newer highs on the price for the weekly chart. So negative divergence on the weekly chart. All right, that just tells you that the trend is really starting to fade. On the daily, same thing. You can see here. Let me erase this one. On the daily, negative divergence there on the daily, as price is continuing to make kind of pop above the highs, setting in divergent highs. So that tells you that the momentum's starting to fade there on the daily as well. And then if you go to the hourly here, same deal here on the hourly, negative divergence there on the hourly, where you can see we just have popped right here. This was a divergent high while momentum was making a lower low. So negative divergence across all time frames on this. Now we just need to now we need to find the trend lines and wait for some sort of a price break. So right now, I think it's just starting to do it right here. Looks like it's starting to creep down. I'm trying to see how impulsive this breakdown is going to be. If it really wants to start to sell off right now, then I'll probably take a short on it. But I'm waiting to see on that one. So looks good to me. There's a trade idea. Again, just my opinion, not trading advice. This Etsy one. So here's what I see in this. I've been kind of analyzing this for the last few minutes. Negative divergence here on the daily is still intact. You can see you can see it right here. We just continue to, it's still there. Well, sorry, it's not negative divergence anymore because prices has now confirmed and converged, and price is moving down. But momentum's still moving down. So I don't think this one's over. But what I see as is possibly happening is we basically we have this little kind of rally right here, right up to resistance at 139. We'll reject right there, and we'll head down towards 128.53, which I see as the next level of support. If it does that soon, then we might start to set up, a bullish divergence kind of play where it does something like this. This comes down, makes a new higher low, and sets that up. Now on the hourly, you might be able to see that as well. If it rolls over soon and rolls down and tags this 128.37, then we'll probably have bullish divergence there in the hourly like that, making it setting this up for kind of a bullish play. So I think that's what's going to happen, but we'll have to continue to watch that. Peloton continues to go lower. You can see here on the, we just continue to work our way lower. Now we are starting to, get set up for a bullish play or a bullish divergence, but I still think we're coming down to tag this trend line, around 105 or so. Even my trend line might even be off slightly. I could move it down here like that. I was looking at this. Maybe it's something like that, and that would set this up around, around 100, 102, something like that. So we're going to watch for that, but that continues to work. And my final one, Intel. I'm going to wrap up after this. Intel just reported earnings. They're down 11%. Big gap down today. And technically there's some damage that's been done as well, as long as it can hold through the day. So here's your daily chart, and this is really going back to 2009. Yeah, so this is your bull market of Intel, and really your entire price channel going back to 2009. Intel's just been running up this price channel. Even on these big pullback days, it's just pulled back right to the bottom of the price channel. Well, you can see recently what we have going on is today we're breaking that price channel. You can see as I zoom in, we're just barely breaking it. So we'll see what the day brings. This is a daily chart, so you really need to wait for the daily close. But and it's not that impulsive either. It's just barely hanging out below here. So that's why I don't necessarily I don't think this is a breakdown. Now, if this increases and starts to intensify, the selling starts to increase throughout the day, and we really start to sell off, that would tell you that we've actually just broke the bull market price channel in Intel, and this stock is now setting up for a for a bear market. So bigger picture stuff there, but that is at play today. And we've had, you got to watch out for whipsaw signals. We've had a couple whipsaws throughout. You can see where we just dip below that trend line. But, if you see a nice impulsive sell-off and a daily close at the lows, at or near the lows, that's going to look a little different, and I think that is going to be a breakdown. So I'm watching for that. We're going to go ahead and wrap up here. I appreciate it, everyone. Thank you, and I'll catch you guys on the next one.